Hey everyone, this is a trader investor again, and in this video I'm going to show you a 15 minutes opening range and VWAP strategy. And the reason why you see save here is I'm using the opening range and the VWAP as a structure and area of value, not as a trigger points, but they're guiding the markets, the price actions, whether it's going to go up or down. So depending on where price is in relation to the 15 minutes opening range and the VWAP for that day, based on those two, the relationship of price with those two will guide us on a structure and area of value. When we come to area of value, we execute. So I'm going to show you how I implement this strategy. Very simple, not a lot of complication in this strategy, and it's very easy to also understand. So what we want to do, and as we zoom out just to make it easier to view, what we want to do is have the first 15 minutes range plotted out, the high, the low of that 15-minute candle, because I'm using 15-minute bars, the high and the low, and the white line that you see is the midpoint between the high and the low. So once we plot this out, there are two things that we are looking for. First, we want price to be above the VWAP, which is the yellow dotted lines for call options, and we want price to be below the VWAP for put options. Going up for call options, going down for put options. That's criteria one. Criteria two, we want VWAP to be above the midway point of the 15-minute range for us to take any signal on the long side. And for us to take any signal on the short side, on the downside, we want the VWAP to be below the midpoint of the 15 minutes opening range. So these are just very simple rules. 15-minute range, high, low, mid. VWAP in relation to the opening range. That will tell us whether we're going to go up or we're going to go down, whether we buy call options or we buy put options. It's the relationship of the VWAP to the opening range that determines this move. So this is critical to see and understand as well. So once we have the opening range identified, we know where the VWAP is sitting. The next thing is, where do we find the trigger? So we have to be patient in this strategy. This strategy works if you're able to monitor the charts every 15 minutes. If you're doing other work, but you can have the charts open on the side, because it doesn't require staring at the charts. As you see from many of my videos, I don't like staring at charts. I don't like to spend a lot of time on charts. This is a strategy that I've used in the past when I have extra time, but mostly this is one where you need to have the charts open to some extent to be able to monitor. So if it's a day where you can monitor until entry but cannot monitor until exit, I would highly recommend you forego this specific strategy, because I have given you other strategies that work on 28 minutes a day, 14 minutes a day, very, very easy. And I'll add those at the end of this video. I'll add the link to those strategies. So for this one, as you're monitoring and it requires patience, what you want to do is price to go outside of the opening range and retest the opening range, but does not close outside of the opening range. So let me be a little bit more specific when I say outside of the opening range. If you're on the long side buying call options, you want it to close above the opening range, but not below the opening range low. So you want to make sure that this range is respected on a 15 minutes close by close basis, that price has respected this boundaries. Price is not closing outside these boundaries. So that's very, very important. That's key number one. And once we do that, then there are a couple of areas for entry. I use two entries. One is at the break of the highs. Just set an alert. You don't even need to monitor the chart. Just set an alert, and as soon as the break of the highs occur, you enter your call positions. The other one is a little bit more timely. I just like to draw a trend line to where price has tested the boundaries, and when price crosses the upper limit of the trend line, then you can also enter. So it gives you a little bit of an early entry, because our stop loss for either entry is the same stop loss. So the stop loss is right below these lows, and our target is at least twice our risk. So if you have chosen this as an entry versus this as an entry, you can see that the second entry, the more conservative entry, requires a lot more movement. But not to worry too much, because those movements occur, and we're not talking about huge movements. So what we want to do is from high to our area here, and we want this risk reward number to be 2. So if we drag it up, to about right there is about 2. So that's what we're looking for, and that area, as you can see, has been hit at the end of the day, right towards the end of the day. So that's the risk reward. So if you have chosen the earlier entry, then your 2-to-1 risk ratio comes much sooner. Here I like this entry better, because then I can take off 50% of my position and let the other one ride. If I do take the entry at the break of the highs, I'm exiting all 100% at the 2-to-1, because I'm not giving myself a lot of room. But with this one, I'm going to take off half at the 2-to-1 mark and ride the rest and see what I can get. 3-to-1, 4-to-1. And as you can see, on this particular day, price actually did go up to a 4.43-to-1 ratio. This is very good risk reward ratio. So this is why I choose the entry that I choose. So very simple. So again, for the rules, to go on the call side to buy call options, price has to respect the opening range 15-minute range boundaries on a close basis. VWAP has to be above the mid of that range, and when price has a short pullback and resumes its bullish trend, I enter for an exit, and very nice exit at the other side. If price has not moved a lot throughout the day, I will keep my stop loss. But if price has moved significantly, then I might move up my stop loss. But this generally works better if you can maintain your stop loss. And I try not to go right below the low. I like to give myself some 20, 30, sometimes 50 cents wiggle room, because I want to get as high as possible, and I also want to give the charts room to play, because sometimes they move up very quickly, very good, but sometimes it's in a range, and when it's in a range, I want to give it room to play. So this is how the rule works. And I'll show you, for example, on the 29s, there is no entry because VWAP is below the midpoint, and there is no trigger on the short side. There is no trigger. So let me erase this prior drawings. and so there's no trigger here. This didn't happen. Or if you go to more aggressive, maybe you have taken this trigger and got stopped out. So here's where being aggressive gives you a great risk to reward, but a potential loss here, because you break this trend, and as you break this trend, then the price reverses immediately. But those things happen, that's part of the game. So as long as you're limiting your risk and your contract size, everything should work out. So in this particular instance, price VWAP stayed right at the midpoint throughout the day, so no entry for me, because I want to see a break and a pullback, right? A break and a pullback, just like we saw here. We saw a break, a pullback that just didn't materialize. But on this case, break, pullback, it materialized. So depending on where you pull the trigger, on the 29s, it might have triggered you in for a loss, but that's all right. And then on the 30s, no trigger. Now, here's another thing I will add for an entry possibility, an early entry possibility. On the 30th, when we, even though we didn't have any entry, we saw price closed above the opening range and retraced all the way below the opening range and closed higher than the opening range and VWAP above the midpoint. So when I see this, the very next morning, if price gaps up, I'm going to take that position right there. I'm just going to assume this is just a continuation of this up move. That's my assumption. That's how I interpret this trade and enter it. So if price gives me this indication that, okay, we have this pin, hammer here above the opening range of that day, VWAP above the midpoint, this is a bullish signal. Price went up and retraced, had a small pullback, it's a bullish signal. We are making a good headway, so I would enter here to go long. If somebody is not comfortable with this setup, then it's okay to wait until price breaks above the range and pulls back to the top of that range, and using our two entries, either enter here at the break of this trend line or enter here at the break of the highs. So either way, it's a good entry, it's a valid entry. It just depends on risk to reward ratio. Now with this one, on this day, we had entered, but let me show you the risk reward from this entry here. So from this entry, our stop is here. So when we want a 2-to-1, it's quite some distance away, right? We're going outside of our boundaries. We're going outside of our boundaries. So that's quite a distance away. This is why I don't like this setup, because it's requiring SPY to have a really explosive move for that day. But if I bring down my entry much lower, then my 2-to-1 is much lower as well. So every time I risk 2, I want to make 4. Every time I risk 1, I want to make 2. This is why I choose this entry. There was no indication that price is falling apart. It did not go in my favor for a long time, but it did not also go against me. I have my stop here as my protection. I kept going, and the next day price gapped up. I don't have here, just like the previous day, I don't have an indication to enter right at the open. like to add to my positions because I'm already in positions, but not to add because price did not close above the opening range. So this was no entry at the open, but it's an entry when price breaks the high of that particular day and rebounces. And but I'm not adding because I'm already in a trade. And in this trade, when I'm reaching these highs, I'm exiting. So that happened, you know, an hour and a half after the opening of the next day. So this is a swing trade. It's you're in it for, you know, about a day and a half, sometimes the same day, but because of the 2-to-1 ratio. But if I'm in it and price has not been strong, if price has just been moving slowly, I'm exiting all 100% of my position when that happens. Of course, you know, you can stay in. You can stay in and, you know, tighten your stop, stay in, and price just kept going up. So just let's just do one example on the put side, because everything in the last few days has been just tearing up. Let's just find something on the put side here, something that triggers. So here on the 24th, price is dancing around, you know, between the higher end and the lower end of the opening range. And if you are looking for this trend line break, then you are in and got stopped out. If you're looking for the highs, you are never triggered in, so everything is good. But once you get stopped out on this trade, then we have another trade here. We pulled back, so we went on the other side of the opening range. VWAP started to get very close to the midpoint and started to cross it. And so when the trend line breaks, when this trend line breaks, I'm entering a short position. In this instance, what I usually do, this is one of the very rare moments where I would want to break this low to enter. And my reason for this particular one, why I want to wait for that, is VWAP is still, you know, it's making its way down, but it's still above. So it did not cross until these lows were crossed, right? Until these lows were breached, VWAP was still above. So that's why I would enter here in this position. And whether you get the max reward on this or not is to be determined by our analysis. So we break it here, but let me get the short side for you, not the long side. Now, when I am showing you these 2-to-1 risk ratio, because I'm doing options, I'm not showing you the options gains. I'm just showing you how much SPY has to move in my favor for me to take my gain. So when you multiply that by the number of contracts, I usually do delta 50 right around at the money. So a $2 move is a $100 per contract position. So that is a pretty good position. So if we take this on the low side and our target stop is somewhere around here, and a 2-to-1 is around here, so I probably never got that 2-to-1, right? But not right away. It took some time, but we finally got it. Took some time. That's why I like to enter at the break, but because of where the VWAP is on this day, it took a while for this exit to materialize. But that's okay, because sometimes that's part of the game. So I just wanted to add the short side for you as well. And just remember to also check out some of the other strategies that I pointed out in here for your 28 minutes a day, 14 minutes a day strategies. All right, everyone, take care and talk to you soon.